All right, folks, here we are, day two of President Trump's new administration. A bunch of executive orders signed on immigration and a whole bunch of other things. There was an announcement, $500 billion investment over a period of years into AI data centers. That's going to be from the private sector, a group comprised of Oracle, SoftBank, and one other participant, I forget who. Anyway, that's a private sector initiative, but Trump is behind that. I'll tell you, and we had a strong close today. We still haven't recovered the highs from last month, but and I think we might have a little trouble doing that. But I understand this rally on excitement, enthusiasm. The election has, now the inauguration. It's been really incredible. And, a lot of short-term movement in the market is based on emotion. But I will say that I don't see anything really necessarily negative in the fiscal flows. They're still strong. Tomorrow actually is a Social Security payment. It'll be the last one for this month. So we will peak out tomorrow, short term, until the 31st of January. We're going to get first of the month payments because February 1st falls on a Saturday. All right. And February should be good. We have a quarterly interest payment coming up in February. The window that I'm looking at, which could be negative for the market, is going to be, of course, April 15th. It's a tax strain going into May 1st. May 1st was the IRS extension for hurricane-affected areas from last year. They got an extension until May 1st. So we're going to have a big drain right around mid-April to early May. And it'll take some time to recover from that. Treasury now, from what I understand, operating under extraordinary measures. That means we hit the debt ceiling. I believe it was today. And I don't know who's in a Treasury now because they haven't confirmed Bessent, the Trump's nominee. I don't think he's been confirmed yet. The only person who's been confirmed, I think, is Marco Rubio. He got in easily. It was, everybody voted for him. There were no nays. So I don't know if Bessent is in, but Treasury. Yellen said last week that as of today, Tuesday, they were going to need to operate with extraordinary measures. That simply means they manage the books so that they could make payments. Okay. And that could function like that usually for a couple of months, probably in this case, maybe through April with those tax deposits coming in. But Congress is going to have to do something on the debt ceiling eventually. If they don't do something on the debt ceiling, then it's going to severely restrict the fiscal flows. And that's something to consider because, as I mentioned yesterday, and as I have been mentioning, there's a contingent of Republicans in the House who are, they're fiscal hawks. And that's what killed the first spending deal that they had to pass back in December. Actually, it took 3 tries to get that deal, and they were only able to get that deal through. They were only able to get it passed when they removed. Trump wanted to suspend the debt ceiling. He actually wants to get rid of the debt ceiling, which is, that's what should happen. But it was that group of Republican members in the House that said, no, we're not going along with that. So that's going to be something. Remember, because back in 2023, I said that coming into that year, remember when we went from 2022 into 2023 and everybody was saying there was going to be a recession, that was a universal call. 100% of economists out there were saying we're going to have a recession. I said, as long as Congress raises the debt ceiling or suspends it, the market's going to go to new all-time highs and the economy is going to be fine. And that's exactly what happened. So I'm going to bring this up again. And I don't know necessarily if this time the situation is any different from the last time. It seems to me that the deficit hawks now, they're more numerous in the House. But these things end up being a game of brinkmanship, and then they end up passing something. So I would say it leans more towards some kind of a deal. But the deal may encompass spending cuts in order to get this passed. And again, we're not at that point yet. But in order to see the debt ceiling raised or suspended, I'm sure they're gonna demand cuts. So this is what I've been talking about this year. It's the Doge, it's the fiscal hawks, it's this just outcry, constant, incessant outcry about the debt and the deficits. I saw something ridiculous today that Mark Cuban launched a meme coin. I'm not even sure what those things are, but apparently anybody could do that. There are platforms now where you could launch your own crypto meme coin. And he launched one to pay down the debt. I mean, which is crazy because, like, ostensibly, if you have a cryptocurrency, and let's even say it goes up in value, first of all, you have to buy it with dollars, right? The dollars have to be in the system. But then if you want to pay the debt, which there is none anyway, but let's just say the debt is payable only in dollars. So that crypto meme coin, whatever he created, would have to be converted into dollars. Where do the dollars come from? The dollars come from the issuer, which is the sovereign, which is the United States government. So it's like you're basically exchanging dollars for dollars. So the whole thing is it's just wrapped up in this ball of idiocy. I mean, complete idiocy and stupidity that it at a certain point, it's laughable and it's pathetic. It really is. So here's what I'm looking at, all right? And for me, this is like, set aside the stock market and everything for a second. Set aside the fiscal flows. I'm looking at the dollar. To me, the dollar is, that expression, like the canary in the coal mine, like it's the barometer, the first line indicator that something is going wacky or something's going wrong. And I continue to think that this explosion of crypto, which is a brand new thing, okay, really, when you think about it, and it's becoming broad, the acceptance of crypto now, and especially with Trump, saying he's going to back it, that the United States government is going to be the biggest player in crypto and essentially giving big time validity to this thing. It's gonna have consequences. This whole crypto revolution, I think anyway, is going to have consequences far beyond what most people think right now. I mean, most people think like, oh yeah, it's a great speculative medium. It's not tracked or regulated by any sovereign or central bank. It gives anonymity of transaction and all this stuff. Yeah, that's all maybe great and good. I don't know. But what gets me is like, this stuff really seems to be catching on. And this has some very serious implications, I think, for the dollar. Now, it's still too early to make any claims about what's going to happen. But I just see this thing spiraling and spiraling, getting bigger and bigger. A lot of people getting into this who I think don't have a real understanding not just of the crypto, because I'll be honest, I don't really have an understanding of crypto. I have said over the years, ever since we started talking about Bitcoin, I said it's probably going to go up. I said the initial motivation to have it for people was, I said it was a manifestation of the rest of the world, or the world trying to look for an alternative payment system to the dollar. I believe that was what gave it the initial impulse. Now it's taken on a whole other dimension, I think, especially with the U.S. government itself, the dollar issuer, saying, now we're going to get into crypto. So, if I look out over the horizon, if I look out over the horizon and try to, kind of think of how this thing could play out, I just think it has very serious, potentially serious negative implications for the U.S. dollar. Like, why do you want to undermine even Trump's nominee for Treasury Secretary, this guy Scott Bessent? In his confirmation hearings, I don't know if any of you watched it, he said, it's not a good idea. He said, why would we, the United States, want to do that? We have a currency which is widely held, it's ubiquitous, it's widely held throughout the world, where we have in government securities, instruments that they're liquid, people and institutions around the world want to hold dollars in these instruments. He's like, he didn't come out specifically and say, look, this is going to be bad for the dollar. Maybe he didn't understand that. Maybe he didn't want to say that. But he did say, like, he's not for this. It's not such a great idea. Now, Trump doesn't seem to be, or maybe hasn't heard what he said, but he's still very much on this crypto bandwagon. So me, personally, it's something that I'm following right now. It's in its very nascent early stages in terms of, let's call it global use or official global use. We've seen some countries embrace it, small little countries, but now you got the United States of America getting on board, it seems, with this whole crypto thing, with Bitcoin. And again, I don't think a lot of these people have thought it out. I don't think they understand the consequences. I think they view this, again, like they view everything through a single variable analysis. Like, oh yeah, this is great because it's going to keep going up in value and we could use it to pay off the debt. I mean, that's kindergarten. That's like amateur hour. That's like, you don't know what you're talking about, or you're very, very confused. There's a whole other side of this, potentially, I think, that has a much darker, or has much darker overtones to it. So it's going to be interesting. Right now, I think that setting the crypto thing aside, I've been talking about, the dollar is very much tied to, the dollar's trend now has been very much correlated with U.S. net petroleum exports. And I've been telling you guys that has hit a resistance of 3 million barrels a day. We cannot surpass, or we have not been able to surpass 3 million barrels a day. And as a matter of fact, it's recently, over the last few weeks, it's starting to trend back down lower again, 2.4 million barrels a day. I think that's a short-term top in the dollar. We'll see if eventually, if we could surmount that level, if U.S. petroleum exports, and I don't know if they can, because we have domestic demand. We're pumping out record amount of crude, 13.5 million barrels a day. United States, it makes it the largest producer. And, we're probably exporting the max that we can right now based on foreign demand for our crude and stuff like that. So I think the dollar's at a peak right now. Obviously, other things are going to come into play. There's a lot of, the monetarists will look at the dollar through the lens of whatever the Fed does. But I'm looking at it big picture, like what's going to happen with this crypto stuff. It alarms me. I have to say. And we're talking about a trend here, which if it develops along the path that I think or that I see developing, this is the equivalent of sterling, British pound, British sterling losing its, and I've never talked about dollars losing its reserve status, but this would be the equivalent. You're literally replacing it through policy not coming from, the BRICS or something like that, which is totally bullshit. Policy coming from the United States itself, undermining, potentially, I'm going to keep repeating that. I don't know, but, if Bitcoin is an official currency of the United States, that's it for the dollar. I mean, that's it. And all the benefits that come along with that. So, and again, this is a very early thing. It's not something to go out and trade on, although I have to say that I do have a small short position in the dollar against the yen, but that's more a tactical thing than a long-term strategic thing. I just, like I said, I think U.S. petroleum exports are topping out, and I've been long the dollar. I mean, if you go back, remember last year, what was it like around the summer or in the fall? And everybody was panicking, and they said the dollar's going to crash, and they were looking at the dollar index. Oh my God, it's going to break 100, or it's going to break 103, whatever it was at that time. And I was saying, don't worry, the dollar's going up. The dollar is going up. The dollar is bullish. There's not going to be a crash, and that's what happened. So now I'm saying, I think that's it for now, and I'm playing a pullback, and we'll see what happens. Anyway, that's it for today, folks. Please like and subscribe if you've done that already. Thank you very much, and don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. You're going to want to be on this, how this stuff develops. You're going to want to be on like what happens with fiscally here, with policy. I mean, we haven't gotten into the meat of this stuff yet. Trump signed a bunch of executive orders covering a whole broad range of things, not just economic, very little economic at this point. But once Congress gets hammering away on the fiscal, on some kind of budget or some kind of continuing resolution, then and the debt ceiling, you're going to want to know what the details of that are and the implications that it's going to have for the economy, and from the economy, stocks and risk assets. That's it for today. See you tomorrow. Bye.